Palantir's Q3 earnings report is right around the corner, and everyone is anxiously waiting. But it seems like Wall Street and huge funds know something that we don't. Today it all changes. Their recent stock suggestions for Palantir are really shocking. Could there be price manipulation this close to the earnings report? And how it might result in you losing all of your money? Well, let me explain. Disclaimer. Over the past few days, Wall Street has been very active when it comes to their outlook for Palantir. And right now, they're giving out crazy predictions for its price movement. With earnings right around the corner, these will definitely affect where Palantir will go. So, stay tuned and see what they have to say about Palantir's future. Palantir has surpassed or matched Wall Street's earnings per share, estimates twice in the last 4 quarters, but missed on 2 other occasions. But here's what's surprising about their new rating of Palantir stock. Despite some solid performances, Palantir's stock holds a consensus hold rating overall, reflecting mixed views among analysts. And here's what this implies. Wall Street has shifted its stance, telling Palantir investors to hold their shares. This is a notable change from just 3 months ago. Back then, 3 analysts had given Palantir a strong buy recommendation, and 1 had suggested a moderate buy rating. Now, the sentiment is more cautious, with the consensus leaning toward holding rather than buying. This change in outlook could be seen as Wall Street influencing how people perceive Palantir. The shift from optimism to a more reserved view might make some investors second-guess the stock's potential. By offering a slightly bearish perspective, Wall Street may be swaying sentiment, especially after Palantir's recent earnings per price miss. However, it's important to consider whether this cautious view is justified. Some might believe that this outlook could be more about managing expectations than an actual reflection of the company's future growth. In any case, Palantir's long-term prospects in AI and its solid fundamentals still remain a point of interest for many investors. However, to some people, this change in outlook to something bearish could be a sign of something bigger. Could this be Wall Street's attempt at manipulating Palantir's price? If this is true, then they could be doing this to pull the price down and give them opportunities to ride the stock before it rises again. Take these predictions with a grain of salt. After all, no one can accurately predict where a stock would go. What's sure, however, is that a few of these funds who are suggesting a hold rating on Palantir have a good outlook for the company. Hear this out. Despite the cautious outlook from Wall Street, 3 funds are giving a buy signal for Palantir, as shared by a user on X. To these funds, whether the stock grows or dips after the earnings report on Monday, they still see Palantir as an excellent long-term investment. This shows confidence in the company's potential, even if there are short-term concerns. And here's why this matters. This kind of support from major funds could influence how others view Palantir. When large, influential investors back a company, it can shift public perception. People might start to look at Palantir more positively, seeing it as a strong player in the tech and AI sectors. The buy signal from these big funds could make smaller investors reconsider their own stance on the stock. While Wall Street's current hold rating suggests caution, the confidence from these funds could balance that outlook. It may encourage investors to focus on the long-term growth potential rather than the short-term market fluctuations. For those watching Palantir closely, this positive signal from the big funds might boost their trust in the company's future trajectory. In fact, one fund has been reported to have almost quadrupled their shares in Palantir. Stars Ohio, a $26 billion fund, recently made a significant move by increasing its Palantir holding by an impressive almost 400%. This adds over 130,000 shares to its position, bringing the total to more than 170,000 shares. Such a large increase from a fund of this size shows strong confidence in Palantir's future growth. But despite all these good updates, there are still some that see some downside to Palantir's movement. And these negative outlook for Palantir's future might have some merit too. Listen to this. Some analysts and investors are concerned about the stock being overpriced, and they believe a major dip is coming. And we're not just talking about a small correction. This could be a huge decline in price. These analyses mostly focus on Palantir's current valuation, which they argue is too high for where the company stands today. The stock's high price-to-sales ratio has raised concerns, and many feel it doesn't fully match the company's earnings and growth potential yet. These arguments have merit and can't be ignored. While Palantir has strong, long-term potential, the idea that it might be overvalued in the short term is something to consider. For some, this means there could be a correction coming soon. Investors are divided, with some seeing Palantir as a long-term winner and others feeling that its current price isn't justified. Whether Palantir drops or continues to rise, the debate around its valuation will likely continue. In line with this, a dip in Palantir's stock could still happen, but not because it's a bad stock. Instead, the timing of their earnings report is playing a big role. And this is where things get interesting. With the elections coming right after their report, emotions are going to run high. Some investors might sell out of hype or fear, reacting more to the broader market sentiment than the company's actual performance. Palantir has a habit of reporting earnings on interesting macro days, and this time is no different. They are set to report on one of the most emotional days just before the election. This timing adds another layer of uncertainty, as political events can influence the market and drive investors to make quick, emotional decisions. While some might see this as a reason to worry, others may view it as an opportunity. The market could react strongly, causing temporary volatility in Palantir's stock. However, this doesn't change the long-term outlook for the company, which still holds promise in AI, cybersecurity, and government contracts. Investors should expect some fluctuations, especially with the heightened emotions surrounding both the earnings report and the upcoming election. Palantir always seems to pick critical moments to release their earnings, and this could be another moment where emotions affect the stock's short-term performance. And, as another user on X has shared, the idea that Palantir will rally from $6 to $45 and then significantly retrace seems hard to believe. This is the AI revolution, and Palantir is at the forefront of AI enterprise software. The company has positioned itself perfectly to capitalize on the growing demand for advanced AI solutions. Investors know this, and many see Palantir as a leader in this space. For retail investors, the focus should be on holding their positions and supporting Palantir through its ups and downs. The stock's impressive run so far shows that the market recognizes Palantir's potential, and it's likely that many long-term investors will stay the course. The future of AI is bright, and Palantir is in a prime spot to benefit from it. A huge retrace to much lower price levels seems unlikely, given the role Palantir is playing in this AI-driven world. While short-term dips and corrections might happen, the company's leadership in AI technology makes a drastic pullback hard to imagine. Palantir is too integral to the AI revolution for it to collapse in value. The long-term outlook remains strong, and retail investors who believe in the company's mission and vision are likely to hold on to their shares. As Palantir continues to grow and secure more contracts in both the private and public sectors, the stock could see even more growth. In the AI revolution, companies like Palantir are driving innovation, and that is something investors should keep in mind. A major retrace is not on the horizon because Palantir's position in AI is only becoming stronger. On top of this, a major bombshell was dropped by one of Palantir's employees. They revealed major updates to the features of their offerings. These updates promise to bring even more value to users and help them harness the power of AI in new ways. One of the most exciting new features is called Compute Modules. It might sound simple, but this tool is incredibly powerful. Compute Modules allows users to bring in their existing codebase, no matter the language, and run it inside Palantir's AIP. This feature is a game changer for those working with complex workflows. Whether you're using your own logic like optimizers, machine learning models, or custom data transformations, or even third-party tools you've purchased, Compute Modules lets you run them seamlessly within Palantir's platform. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money. So, don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.